What's up, everybody? Welcome back to Trading Wars. Thank you for joining me today. Very happy to have you guys here today. We're going to be going through a lot as usual. Going to be blowing some minds wide open today, opening your third eye and showing you the way of trading. Okay, so here we go. We got about 70 people in here. I just checked the audio, so audio is all good. So let's start off like we always do. Please let me know where you are where you are tuning in from tonight. Please comment in the chat, and I'm going to share a few of your names on the screen. All right, so let's go. So let me just go forward here. So we have another Rich from Boston, Boom Shot from Texas, Angel from Los Angeles, Miku from Toronto, Dennis from Van City, Pat from Los Angeles, Juan from Long Beach, California, XF Bill from Miami, Florida, baby. Awesome. Awesome. A lot of Florida people in here. Thomas from Fort Lauderdale, Drew from Mississippi, Dustin from New York City, Omar from CT, Paper Trader from ATX, and last one, Pau Dal from Maryland. All right. Good stuff. Okay, so welcome today, guys. Welcome. We're gonna do a lot of good things today. Let me just make sure that we just let everybody know we're live, because just want to make sure nobody missed live. Now come for the secret sauce. Gotta make sure we get everybody in there. Okay, so today I want to start off actually. So here's AMD. And we're going to actually start off with AMD today. We're going to talk about the option plays, how to trade it, and all of that. And what we're going to do is I'm going to write down a few things, a few notes today. So today is the type of day to be getting out the pen and the pad and be ready to take some notes, be ready for the education. And then near the end, I'm going to talk about some things for swing traders, about automation. And I'm going to talk about what I do for myself and for my followers. Okay, so this is going to be an action-packed evening, so please pay attention and take notes and get ready to rock and roll. So basically I was thinking about this, and I was just thinking about how I can present this to you guys in the best way, and I'm going to write this down right now. So there are, pull up one sec here, we got Miku with the $10 Canadian, brother. Thank you very much. Let me check that super sticker out right now. So that's going straight into the Starbucks fund. We're loading up, that's definitely a cappuccino or a frappuccino. So thank you very much, sir. Okay, appreciate that. So here we go. So I spelled there wrong. So there are 3 types of trading styles. Okay, this is what I boiled it down to. This is for me, guys. This is my way. It doesn't have to be, the perfect way or whatever, but I'm sharing with you the ways that I make money. Okay, and that's what it's important to me. It's important to me to make money. I don't care about having the best lines or the best wording or grammar. I don't give a shit. I want to make money. That's why I'm a trader. That's it. Okay, and through that, I want to educate people. But when it comes to this is a business for me. So hit me with a 1 if you're trading because you want to make money. Okay, hit me with that. My brother right here, Rudely, with the super sticker. I see you a lot, brother. Thank you so much here with the $1.99, brother. Appreciate that. Appreciate that super sticker. So hit me with the 1, guys. Like, let's be honest here for a second. Let's be honest. Like, there's no need for the bull. We're here to make money. And anybody that is not trying to make money I don't know why you're here for. I don't know. Really don't know. And if you focus on making the money, then the money will come. But if you focus on the drama, if you focus on following random pump and dump, if you focus on Twitter channels that are not bringing you value, you're not going to make money. Okay, right here. Lee Pilgrim right here with the $1.99. Thank you, brother. I know you, Lee. I know you, brother. You reached out to me today. Thank you. All right. One guy said, dude, 1 day in your room and I made a profit. Good stuff. That's what I like to hear. Okay, so there's 3 types of trading styles. So we can be a breakout trader. We can be a Fibonacci, or let me put this, Fibonacci / pullback trader, or we can be a reversal trader. Okay, so before we get into these, I want you right now to tell me what type of trader you are. So hit me with the 1 if you're a breakout trader, hit me with the 2 if you're a Fibonacci pullback trader, or hit me with the 3 if you're a reversal trader. Got my brother here beasting with the $5. This man donates every single time that I'm live. I appreciate you so much, brother. Thank you. Okay, so we already got a good amount of money in the Starbucks fund today. You know, thank you guys. You guys are out here supporting me, and I'm supporting you. That's how the world should be. I help you, you help me. We get somewhere together. But in the world, what it is I rob from you, and you get left with nothing. That's mostly what the world's business is designed on, and that's why our world is basically in this bullshit situation that it is. Okay, so a lot of people, I see a lot of mixture here actually. So that's good. That's very good. And along your journey, you're going to be developing your style and figuring out which one you like the most. You can definitely be all three. You can definitely be all three, but that comes as you are a little bit more experienced in your journey. Then you can be trading all three. But in the beginning, you should really stick with one. Okay, so here we go. Dustin Baudon got a question about gap ups and down with the $2. Okay, I'm gonna check you out, brother. Eric Avalar with the super sticker, $1.99. Thank you very much, bro. Thank you guys. You guys are on fire with the donations today. Brother, Dustin Baudon, can you please post your question again? And then we'll look. How do you handle gap up and down if you're playing orb and the gap up and down throw off your position sizing if you have preset order? That's a good question. Yeah, so Dustin, that's probably the biggest issue with having automated orders with that are going to trigger based on like if it's above a level, it's going to fill you at the open. So sometimes you're going to get bigger size than what you want. So if you're there and you're managing the trade, then what you should do is if you get into a position where you automatically have more size than you need, maybe double or triple the size that you need, then you need to cut your position quickly. So cut it in half. Don't worry about the P&L. Do the right thing with your account. If you know you're over leveraged, cut it in half. Okay. I've had times like that. But when you're, for example, when you're using shares, you're never going to have that problem because you're just going to buy at a certain share price. So that's why if you're having a lot of trouble with that, maybe you should consider just buying shares. And another thing you can do is watch the stock in the pre-market. If it's gapping up too much above your levels, then cancel the order, or gapping down, then cancel the order because you know you're going to get into a position that's too big. You have to manage your risk. That's your job as a trader. You have to do that. And when you're in a position, you know it's too big, you have to cut it. And we got Shanine also with the super sticker. Thank you very much, Shanine. I know this is probably about your 10th or 12th time here on the channel, so I very much appreciate you. All right. So basically what I'm trying to get to here is that these are the three ways to trade. Today, I want to be talking about the reversal trader, but I want to talk to you briefly about all of these. And then hopefully throughout, as we do more sessions, I'll go into more details with everything. Okay. So very simply, a breakout trader. Let's start off with the breakout trader. So a breakout trader is basically someone that is going to take the break above a level for a long or the break below a level for a short. Very simple. Okay. So every day, I always present with you guys in the picks. I give you levels. Okay. So example, AMD, these were the levels. You see these two yellow lines? These were the levels, right? So let me make them in purple so they can be a little bit different. These were the levels that I gave you guys yesterday, okay, for AMD. So we could see I had a level to go long right here at 91.36, which ended up being a false breakout. And then I had a level right here for short. And the level right here for the short was 89.89, and this one was a good winner, right? So this is an example of breakout trading when you're using the levels, okay? So you can use, in this case, this is using the previous day's levels. But you can also be a breakout trader by trading actually on the lower time frame. Like let's look at this pattern right here. So this is one of my holy grail patterns, right? So here's a holy grail pattern. We have an outside bar followed by an inside bar. And you can be a breakout trader by trading the breakout of the trigger. So here's the inside bar, which is our trigger. Okay, so if we break the low, which we do right here, we're going to short. If we break the high, we're going to go long. So in this case, if you took the holy grail short, that was a huge winner today. And I posted that actually on the channel. So that's breakout trading. Okay. I use breakout trading, and I'm at the stage in my career where I can do all of them. Okay, but I want you to just focus on one for now until you're comfortable, and then move on from there. Okay, so breakout trading. Do you guys understand breakout trading? Hit me with the one if you guys understand breakout trading. Okay, hit me with the one. And let me give you guys a little bit more about the concept behind the breakout trading. The concept behind the breakout trading is this. Okay, now let's look into a lot of detail here. Let's examine this candle here. Let's examine this one. Okay, I'm gonna zoom in. Okay, so here's an inside bar. So here's the holy grail pattern, right? Here's the outside bar in white, and then the inside bar in yellow. Okay, so these are my free indicators. You all should have them on your chart. Okay, so walk along with me. So now I can take my mouse here. I'm going to hover over the inside bar. The high of the inside bar is 90.65, and the low of the inside bar is 90.38, right? So you can see here on this candlestick pattern, we have a long wick to the bottom. So what that means is that there was buyers here because they pushed the candle all the way from here to here by the close. And this is what we call a hammer bar or a pin bar, okay? So let me ask you guys a question now. If we break this low, are there going to be potentially some stop losses here? What do you guys think? If we come back down like we did on this candle and we break this low, are there going to be some stop losses here that could potentially be taken out? What do you guys think? So I got my brother here, Raj Kumar, with the $3. Thank you very much, sir. Appreciate that. Thank you, thank you, thank you. So I see everybody saying yes. So so the theory behind breakout trading is that when the candle actually comes back down here and hits this price, that there's going to be bulls that have a stop loss there, right? And then their stop loss is going to get triggered and we can flush down, combined with also with short sellers coming into the market, right? And we can do this. We can look at the same thing right here. We see another inside bar here, and we can see once the low got taken out, we continue to flush lower and lower, right? So that is breakout trading. Like that's what you're trying to do with breakout trading. You're trying to say, okay, if I take the breakout and we break the high or the low of the bar or the high or the low of the previous day, can I take advantage of some trap traders and make some money? So that being said, breakout trading, obviously it's not 100% accurate. Nothing is 100% accurate. A lot of times, like, look at this. These are false breakdowns here. So you can see we break down a little bit and we turn around. We could even see here on the first 5-minute bar, the opening range breakout, we actually pushed up. Okay, we pushed up and broke the previous day's high and then came back down. So those are false breakouts. Okay, so then the false breakout actually is the reversal trading, right? You guys understand that? So the breakout trading is taking the breakout of the bars, of the levels, and the reversal trading is actually doing the opposite. So if it breaks above the level, you're going to short. If it breaks below the level, you're going to go long. So reversal trading is more predictive trading. You're looking for where can I get in at a good deal, whereas breakout trading sometimes can actually not be that beneficial when it comes to particularly like options. Okay, because let me ask you guys a question. So think about this. I hope you guys have the pen and the pad out. I hope you guys are taking notes. So let me ask you a question now. So if you buy the breakout, okay, so let's say you're buying the breakout. So let's say right here, you're buying the breakout. Okay, actually, let's go here. So this one, for example. So we broke the previous day's high. So when we take the breakout here, when this candle is all the way up here, are the calls going to be expensive or cheap? What do you guys think? Are the calls going to be expensive or cheap? Expensive, 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 expensive. Good, good. So let me ask you a question now. Let me ask you a question. So what about if we bought puts there? Are puts going to be expensive or are puts going to be cheap? What do you guys think? Cheap, cheap, cheap. Good, good. So do you guys understand? when you're trading options, it's not just about the levels or taking the breakouts. It's also about getting a good deal. Okay. And Fibonacci is actually in the middle. Fibonacci is not taking the breakout, and it's not taking the breakout. It's actually waiting for a move. And then using that move, which I define as an impulsive leg in my book, it's using that impulsive leg to then take high probability trades on pullbacks or extensions. And we're going to look at all three in this video. Okay. So Fibonacci is basically right in the middle, and Fibonacci is like you already seen the move, so you have a little bit more confirmation, and then you're going to play that. Whereas breakouts are very dangerous. If they don't work, they're very dangerous. Okay. And reversal trading is almost blindly trading sometimes. So all three. So the truth is right now, the truth is none of them are 100% win rate. None of them are 100% accurate. They all have their pros and cons. They all have winning streaks and losing streaks. So what really matters then is how are you going to manage your risk? You have to first find a strategy, find the style that you like, that you can execute. It's not even what it is about, really, guys, is that a lot of people do many different trading, many different styles, all of this. But it's not about that. It's about what can you do every single day that's repeatable. If you're trading on the 1 minute chart, 100 trades a day, that's not going to be repeatable. That's not going to be sustainable. So it's about actually finding your style, but it has to be sustainable, because trading is one of the hardest things in the world, because you have to do it pretty much all year round. There's very, very, very little breaks in trading. Every week is a grind. And that's why most people don't last. And that's why most people don't succeed. So the ugly truth that I'm trying to tell you is you need to pick something that you can sustain. Okay? Okay, good. So now what I'm going to do is, the best way for me to show you the styles of trading is to just trade, right? So like we're going to do some back trading here together, and we're going to go through AMD. We're going to talk about it all, and we're going to go from there. Okay. So here we go. We're going to hit the replay. I'm going to press play. Okay. So I have my indicators on right now. So so one thing to watch, guys, is the last 10 minutes into the close is irrelevant, right? So I know the last 10 minutes into the close set up a holy grail pattern, but that doesn't mean anything, because the last 10 minutes into the close is always going to be very volatile. So I never trade the last 10 minutes, because it's usually going to lose money. And I don't count the last 10 minutes for any of my patterns. Whenever I start the day, I start fresh when it comes to the patterns. Okay. So we're going to hit play. Okay. So here we go. So the first thing that actually happens here is we have the breakout of the level, and this is just going to be a loser. Okay. So when we break out of this level and we come back all the way back down here, you have to basically understand that there's a false breakout. So what you're going to do is either put your stop loss below the candle, or you got to take an L. Okay. But for the other traders, the ones that do the opening range breakout, so the ones that wait a little bit, so some people wait 5 to 10 minutes, right? So when you wait and let it settle down, the first setup on this day is actually the opening range breakout. So the opening range breakout is just taking the breakout of the first 5-minute bar. So I just taught you what the breakout is. If it breaks above the high, we go long. If it breaks above the low, we go short. And the next bar right here comes in, boom. So you're triggered in right here. That's your short entry. This right here is good enough for maybe 20% or so on the options. And then really and truly, we already know what happens on this chart, but this actually becomes a huge winner by the end of the day. But let's continue the price action and see what we have next. So we have the first inside bar on the day, right? So with this inside bar, we can just do the breakout, like we said, right? Breaks above long, breaks above short. But if you're already in the opening range breakout here, you're already short. You don't have to add more to your positions. You don't have to do anything crazy if you don't want to, right? So Here we go, inside bar. Okay, so this inside bar we broke down here, and this one basically is just a false breakdown, right? So if you took your opening range breakout, you're still good, everything's all good. And then we have this outside bar. Okay, then the next bar, boom, holy grail, right? So this is what the holy grail means. It's an outside bar followed by an inside bar. All right, so now we say, okay, this one didn't work, that's fine. The opening range breakout worked, that's good. Now we can try again here. If it breaks below short, breaks above long, boom, there we go. Breaks below, we're in the puts. It turned around a little bit, but that's okay. Our stop's going to be up here or even up here. Okay, and now I want to add the fib onto this. Okay, so take the Fibonacci from the high to the low. This is the morning leg. This is the morning leg from my book. Okay, so this is basically we pulled back in near the 50. And in my book, I talk about candlestick confirmation. So this is an example of candlestick confirmation. You come into the 50 zone right here, the 50 and the 382, you're in the middle, and then here comes your holy grail pattern. So this is what I talk about in my book called confirmation. We come to the fibs and we create a pattern. We have a holy grail setup. Okay, so now we break down the holy grail right there, and that's our short entry. And then here we have one more inside bar right here. This is probably your last attempt, right? I don't play more than three or four attempts on a trade, on a ticker, and I'm done. And that's pretty much it. So here, as you guys know, we continue on, and then we continue and we roll over, right? So the opening range breakout, which I talk to you guys about all the time, was actually a beautiful trade. Look how beautiful that opening range breakout. You get the puts up here. You have the patience to sit through all of this, right? Take it down into the close. That's beautiful. And you can also swing some into tomorrow, right? So then we had that. We had the fib. I'm going to show, and we had the holy grail. Like, I give you guys this thing for free. Like, just imagine this. I gave you a holy grail pattern for free that I created through my back testing, through my working my ass off. I gave it to you guys for absolutely free. Just imagine that for a second. No, not a lot of guys are going to do that, right? So I want to see you guys putting in the work, taking the pen and the pad out and taking the notes and doing the work, okay? Because I'm giving it to you, but you need to do the work, all right? So now I'm going to blow your mind with some advanced Fibonacci. Okay, I want to show you some I want to show you some things that you can do with Fibonacci. I want to show you some powerful setups with Fibonacci. Okay, so let's go into overdrive. All right, so I'm going to show you a concept. Hold on one sec. We have Angel right here with the $2 super sticker. Thank you very much. So let me just take a look at that super sticker. Oh yeah, we got the cool super sticker. Yep, everybody in here are cool gals and cool guys and gals. All right, good stuff. All right, so now what I want to do is I want to take it to the next level. Put on your seatbelts and strap on. Okay, so now let's do a raw Fibonacci. Okay, let's do raw. Let's take off the indicators. No indicators. Okay, let's do a raw Fibonacci. Okay, and all of this stuff are in my book, guys. If you want to support me, buy my book. That's all I gotta say. Buy my book if you want to support me. I think it's fair. It's $88, 88.6. You get 60 pages of my work, and you get 1 free month in the private swing room. It does not get any better than that. Trust me. Okay, so here we go. So we're gonna start off right here. The first move on the day is from this high to low. Okay, this is the first impulsive leg right there. Okay, boom. So we have the first impulsive leg. We pull into the 50, and you see how powerful the indicators are? Because if you don't have those indicators on, you don't know anything. Like, these candles they just all look the same. They all look the same, but this is the reason why I created that, so it can help. Okay, so here we go. So we pull into the 50. Okay, so like I tell you guys, right? When we have the first leg, okay, the algorithm is going to load up here near the 50, wherever, right? In this case, they stopped at the 50 because we had the holy grail, we had the confirmation. And then normally, what do? We push through and we trade to these extensions, 10%, 0.169 and 272, right? So here we go. So here you have the confirmation candle. This is the confirmation that, okay, the algo sold here because we went all the way down here. We almost tagged the 272. So you know they're front running the levels. They front run it. Okay, they cover their profits, so they're in here. they cover here, right? And then right here, we pop right back up, right? So even if you take a scalp from the top here of this bar, or when this bar closes, you just get in here, that's a good scalp. So this is the first leg. Now let's continue. Now we can draw the second leg. Okay, so that's leg one. Now we can draw the second leg. The second leg comes from here, high to low. Okay, look at that. Beautiful. This one pulled back to the 786. And then at the 786, we had a beautiful doji candle. This one is a nice one because it's a trap. You could see it's a breakout and then a push down. So that's a very beautiful candle. So here's the 786. And check this out. We take the extensions across. So now this 786, right? Remember what I talked about? I always teach you guys about symmetry, market symmetry. Nobody talks about this shit. Market symmetry. You see how we pull into the 786? When we have a deep pull like this, look, the algos take it all the way down to the 786. Okay? You see that? Pull to the 786, they take it down because it's like a program. It's like somebody's writing a program. Buy, pull back, 786, sell, 786 extensions. That's what I think. Okay? So there we go. So that's leg one. Trade to the extension, pull back. Leg two, trade to the extension. Now we do leg three. From here, high to low. Boom. Now look at this. Beautiful. This doesn't get any better than that. Look at this. We have this push down. We come to the 50. We come to the 50. Look at this beautiful rejection at the 50. We have the doji there. We come back down. We retest the 50 again. We roll over. Look at all these scalpable plays. Look how beautiful that is. Just beautiful. All right. And then what we can also do here is we can draw bigger legs. So these are all morning leg. And then these are all the sequence legs in my book. Now we can do afternoon leg. Here's the afternoon leg right here. Now look how beautiful that is. See that? See how beautiful that is? This is the afternoon leg. This is the bigger range. We have this push, high to low, like this. We come back exactly to the 50. Again, look right there. Come to the 50. Have the rejection candle is right there. And then boom, okay? Pull back again, right? And then we can do the big leg, okay? And then the bigger legs, I don't really use them unless I'm swing trading, because the bigger leg doesn't give you enough time into the end of the day to really do anything. All right. So there we go. So that's how you can just look at the chart from the Fibonacci perspective without any candles stick, without anything. But I like to add everything in, right? So hit me with a 1 if your guy's mind is blown right there. Hit me with a 1. Okay, good. Okay. Good stuff. Now let me show you guys something, okay? Okay, guys, we don't need, let me tell you something. We don't need to do this. Watch closely. Guys, watch closely. Let me ask you a question. Have you seen other people post stuff like this? What do you guys think? Have you seen people post stuff like that on their charts? And then try to tell you that, oh, well, we're going to take the breakdown here of this one. And, well, we had these bigger stuff here. And then we had this one right here. This trend line here broke down. And then we had a retest somewhere over here. Or what about this one? Hold on 1 second. One second here. Have you seen someone do that before? Honest question. Have you seen somebody do that before? We got the $5 super sticker from my brother. I'm just laughing right now. From my brother Chutron. Thank you very much, brother. You don't miss a donation. You're out here every single day. Appreciate you. So now let me ask you guys a question. How do you trade this? What do you guys think? Somebody tell me, how do you trade that? Shit, what did I do to my mouse? Yeah, there we go. How do you trade this? Is there a way? Or are you always going to go back and say, well, this trend line broke here. This trend line broke here. This one, retest, break to the second one. And then finally the third one. And let me tell you guys something. I did this before. The only reason why I have the right to say what I'm saying here is because I've done it before. I did the lines. I tried all these things and it just never worked for me. It never worked. So I'm just sharing my experience. Okay? I'm sure there's somebody out there that's drawing circles on the chart and spoons and it's working for them. But for the majority of people, it's not. Because we need rules. We need strict rules. We see an inside bar, we take the breakout. We see the Holy Grail, we take the breakout. We draw the morning leg of the Fibonacci. We need rules. Okay? That's all I just want to show you guys that point. That's it. Okay? All right. There we go. Okay? So we talked about the breakout method there. So let me get back. Like, look at this chart. Doesn't it look naked? Let's put this thing back on. Beautiful. Love it. So we have the chart here for AMD. We talked about the Fibonacci. We talked about the breakout, but we didn't talk about the reversals. So let's talk about the reversals, okay? So normally we give levels for breakouts, right? And the only reason, I'm going to be honest with you guys, the only reason that I give levels on Twitter is because that's what people want, you know? $4.99 from Red Gorillas, brother. Thank you very much. People want levels, but it's not. That's why I always say use the breakout or the drill down method. The drill down method is what I'm showing you guys. See how I'm drilling down to the 5-minute chart, and I'm showing you opening range breakout, inside bars, holy grails, Fibonacci, right? That's what I'm trying to show you guys, right? So back to the reversal, okay? So we already concluded that if we bought calls up here, they're probably going to be expensive. And if we bought puts, they're probably going to be cheap, right? Relatively speaking. So in a way, when you think about it like that, you kind of always get a good deal when you try to trade a reversal style, especially when it comes to options. So how you can trade the reversal is I'm going to teach you right now. All right. So the first thing that we're going to do here, okay, is we're going to go to the previous day. We'll always want to start off with the previous day when we're looking for reversals. Okay, not the current day. With the reversals, my style of trading reversals, if we're going to use a Fibonacci, is we want to actually use the previous days. Okay, or we want to look for the price action pattern at the level. So let's do the price action pattern at the level because that one's easy. So for example, here we go. Here's a price action pattern at the level. Here's the previous day's high. We can see a big long rejection. And then the setup that we have is the opening range breakout. So that's an example. So some traders want to be more patient. They want to wait for candlestick confirmation. So that's an example. Here's another example. Here's a candlestick confirmation at the level showing support, right? This is a doji for a long play. And then when we actually come back down here, again, to test the level, we have a nice inside bar. So here's your candlestick pattern at the level, giving you an opportunity to get into the trade, right? So basically, when you're trading a reversal, you can boil it down into two things. You can trade the reversal using the Fibonacci's, or you can basically use the candlestick patterns at the level itself. So either like a hammer, an inside bar, a wick, an opening range breakout, those patterns, you can use them at the levels to execute the trade. Or you can be more predictive using the Fibonacci. So what we're going to do here for the Fibonacci is we're going to take the Fibonacci from low, from the previous day's low, which actually is here. So we're going to take it from the previous day's low, and we're going to pull it to the previous day's high, which is right here. Okay? So generally speaking, what this Fibonacci does here is it just gives you a measurement of the previous day's range and it extends it. Okay. So normally, so not in this case, but normally what happens is the concept is when we break out of this level, in this case, we never even broke the previous day's high. But in general, and we'll look at a few more examples. Actually, let's see if we have a better example for this. Here we go, MU. Okay, let's do this one. Okay. So let's use the Fibonacci from the low to the high like this. There we go. So this is easier for me to tell you guys what I'm talking about. So this is the range of the previous day. Here is the extensions. Okay. So what we're going to do here is we're going to say, okay, once we break the previous day's high, where can we actually reverse? Okay. Where can we actually reverse? And then, by the way, with MU, I took calls right here when we broke the level. I took the breakout here and I got 70% return when we were up here. Okay. So then I just trailed out. That's good money. But what I want to teach you now is the reversal. So what we can do is we take the Fibonacci of the previous days, we project it, and then these levels all the way up here, okay? So it starts with the 10%, which is one of my special levels, 619, 0.169, 272.50, 618, 786, and so on, and then all the way up to 1. So 1 is the total distance of the previous day, so it's a projection. So what you can do is you want to actually look for the reversals at these levels, okay? So what you can do is, here we go. Like, it doesn't get any better than this. Now look at this. We come all the way to the 786. We have a nice doji. And then right there, look at this absolutely beautiful insight bar, just waiting for you. This is telling you, this is the confirmation that, hey, we're exhausting a little bit here. We had a nice run up. Some guys made 70% on calls, right? And then now we're going to start taking some profit. And then we have the nice insight bar right on these Fibonacci extensions waiting for you. It's waiting for you, calling your name, and we know what to do. We take the short right there, we break down, and like, look at that play. Look at that play right there. Boom, look at this. Boom, straight down. That's easily double or triple your money. So did anybody take that one in the chat? Did anybody take that insight bar? If anybody hit that inside bar there for the short, let me know in the chat. Hit me with a 1 if you did it. Hit me with a 1 if you did it. Anybody? You see, like, this is what I'm trying to do. I want you guys to go out there and take these plays with confidence and fitting your style, however your style wants to be, and then come back to me and say, hey, I learned something and I took it. And I did something. And people message me and tell me that all the time. So Ricardo took the FIP. So Ricardo is one of my moderators in my private swing room. So shout out to Ricardo. He took the Fibonacci. So we'll talk about that one too. Right? So there we go. So that's an example of saying, okay, here are the extensions. I'm going to use the pattern to take my entry. Another thing that you can do is what we call limit orders, right? So here's an example, okay? So you have to adjust this based on what you want. I'm not telling you what to do because I can't tell you what to do legally, but I'm going to give you some ideas. So what you can do is use these levels to start building your put position. Okay, so you can say, all right, when we come to the 272, one contract, 50, another, 618, another. Hard stop loss goes above the 1. Okay, that could be an example. Or you could say, you know what, I'm going to load up here with a stop above the 50. In that case, you get stopped out. That's fine. That's fine. You got to figure out which one you want to use. That's the limit style. So the limit style is you add in on the levels blindly. So when you're adding on these levels blindly, just imagine what's happening to the put price. So let me ask you guys a question. So when this candle shoots up all the way to the 786 and you have a limit order to short or to take puts at the 786, what are happening to the puts when we're all the way up here? Are you gonna get puts for a good deal or for a bad deal right here? What do you guys think? Are we gonna get it for a good deal or a bad deal when we're up there? It's cheap. It's so cheap. So it's really actually, when you think about it, it's actually makes sense from a risk to reward perspective. Okay, it makes sense because you're going to get a deal. If it doesn't work, here's your stop loss right here. You take it like a man or a woman, whatever you are, and you accept it. But you understand, if it does work, I can make 3-4 times my money. And this is the next step for me when programming my bot. My bot only does breakouts, and that has to change. Okay, breakouts are great, and they've actually been working really well in the swing trading room. I've been killing breakouts, and I'm going to show you that later. But in terms of day trading, guys, most of the times, from what I've been seeing, at least lately in this current market environment, a lot of breakouts do not last. Do you guys agree? Hit me with a 1 if you believe that there's more false breakouts than real breakouts. What do you guys think? Hit me with a 1 if you guys feel like that, or is it just me seeing this? See all the ones there. And guys, these other guys are not going to tell you about this. They're not. Because a lot of those guys are trying for you to buy the breakout so they can short you. A lot of guys are telling you, buy the breakout, buy the cup and handle, the spoon and fork, so they can short you. Trust me. It's not. You guys think we come on Twitter here and it's just going to be people that want to help you and they're so nice and they're so this and that. A lot of guys are sharks that are sitting there and just pumping stuff so they can crush you. Okay? And don't get me wrong. There's going to be a time when the breakouts are back in action, and it's going to be nice. They're going to be big breakouts, and it's going to be nice, and it's going to feel good. But you have to be able to adapt as a trader. You have to be able to adapt. And you have to understand the context. You have to be in the market. Well, these days, you know what? The breakouts aren't lasting as much as they used to. So let me lock in some profits, or let me look for the reversal. And it doesn't matter what you do, because the only thing that matters is what we always say. The only thing that matters is your risk to reward. Because if you can make on average double of your losers, how many times out of 100 do you need to win? Somebody tell me right now. If you can make on average double of your loser, how many trades out of 100 do we need to win? So somebody tell me. 34, 34, 34, 34. Exactly. Just 34 out of 100. These are what people should be posting on Twitter. This is the knowledge that they should be posting, not posting rounded bottoms, J-Lo bottoms, whatever they call it. We don't need to see that. Post the truth. We need the truth. Okay? So now, let me ask you guys a question. Do you think you can win 34 out of 100 trades? Hit me with a 1 if you think you can win 34 out of 100 trades. Good. And now this is my challenge to you. This is my challenge to you. I'm having an open challenge. I want to see who's going to rise to the occasion. I want you to track your next 100 trades. Okay? When you've completed those 100 trades, come to me, DM me, and tell me, out of those 100 trades, what's your average winner? What's your average loser? What's your risk to reward? And tell me if you finished profitable. Okay? That's my challenge. So here we go. Brian sent in a question. Let's help Brian out. Brian Maverick. I bought SPY 435 puts at 9:36 a.m., hour and a half after open. Okay, so that's not Eastern. 18 cents, got stopped out, and then on 382 for loss. Then those puts ran up to 80. Can you review? All right, let's help our brother out here, because he's helping us out. We're gonna help him out. You know what I mean, guys? That's how we do it. So it says I bought SPY puts. Okay. So here we go. So let's draw at least the previous day's high. Okay. So here's an example of a false breakout. Okay. So let's start with Brian from the beginning. Okay. So Brian, the first thing here is, if you're buying puts, this is your first opportunity, right? You can clearly see it here. We don't even need to We don't even need to look at the rest of the day. We can see right here, we broke the previous day's high, and we have another example of a false breakout, right? We broke above and we turned around. We have a doji and an inverted hammer. So this is an example of a confirmation. Okay, so this is the first area for the puts. Okay, so now let's move on. Okay, so this is my review for you. So we had this should have been your first attempt. Okay, if you don't do that, that's fine. Take the morning leg right there. Boom. We have this Fibonacci from high to low. We pull back in, guys. Look, 50, 50. We hit the 50 twice. One time, two time. Look at this. And even here, look at this, Brian. You have an inside bar, beautiful inside bar right there. And here. Okay, you have two beautiful inside bars right there. Okay, when you're taking these trades, right? If you're taking puts, especially, your stop loss, you gotta be comfortable with your stop. You can't put it right, well, you're not, since you're doing puts, you're not gonna have it like on the candle or whatever, right? But put it a few fibs up, put it on the 786, put on the 886, put your fib at the high of the day, whatever you want to do, right? So that's the first play. Here's the inside bar, short here, beautiful plays, right? Let's move on. What's the next thing that we have here? Okay, let's draw the sequence. Here's the sequence right here. Okay, high to low. Boom, right here. Beautiful 886 rejection. That's why the book is $88.60 because of this. Because this one actually is the best risk to reward that you can get on the Fibonacci. Okay, because if you short on the 886, you put a stop loss above the swing high like this, you have a tiny bit of risk and you have all of this amazing reward. Now look at this. Okay, that's 21 times your money right there. Okay, that's beautiful. So there you go. So those are the plays. I'm not sure what you did, but that's how I would have played it. Okay, so let's see. So can you review the trade and tell me what I did wrong? Okay, hold on 1 second, Brian. So start from here. I bought SPY at 936, so that's 1036. Okay, so you're buying puts, brother. Look where you're buying puts. You're buying puts after a Fibonacci down. That's horrible. That's the worst thing you can do, because the puts, what do you guys think? Let's help Brian here. Are the puts going to be expensive here or cheap here? What do you guys think? Right? And this is fine, Brian. Don't worry about it. You're learning. I'm not trying to put you on blast or anything. I just want you to learn. Right? So what do you guys think? Right? So that's not the place where you want to try. When you're trying these plays, you always have to be telling yourself, am I getting a good deal or a bad deal? Right? That's what you got to tell yourself. Okay? That's why you didn't feel confident in the trade and you took your stop loss and then you ended up running after because you got a bad entry. When you get a bad entry, your mind will play tricks against you and you're going to feel like you want to exit. So that's what happened, brother. Okay? Here we go. Can you review trade and tell me what you think I did wrong? Fib high of day to the second candle to low of the sixth candle. Fib was the high of day, second candle, understood, to low of the sixth candle. 1, 2, 3, 4, 5, 6 here. Right? Okay, so this is fine. Yeah, that's what we just did, brother. That's the morning leg right there. Look, here's your rejection on the 50 and the 50. There's your rejection. So I think what you did is you're not thinking about where your stop loss is. So anytime you take the puts, so let's say you bought $500 worth of puts, you have to ask yourself, where's my stop going to be? So is your stop going to be the high of the day? Like if you had your stop at the high of the day, you're fine, right? You're not, it never comes back here. So you're fine. Or you got to use one of these fibs. Okay? That's how you got to do it. All right, beautiful. All right, brother, I hope that helps, brother. So let's go back to MU. All right. So yeah, so we're talking about the reversals, right? So we talked about all the reversals, okay? So we're good there. So now let's see here, Citigroup. Okay, Citigroup is a good example. This is actually a beautiful one. Look at this. Wham. Beautiful. That's a beautiful trade. So let's take the Fibonacci from the low to the high. Let's extend it. Look at this. You see this? It's, oh my God. I'm going. I gotta go. I'm done. It does not get any better than that. Just look at this with me for a second. So The first problem with Citigroup is I believe it was the day after earnings, correct? What do you guys think? Can you guys tell me if I'm right there? I didn't end up playing Citigroup. I took AMD and MU. I didn't take Citi. I didn't take J&J. I regret not taking J&J. I should have. Because I'm in a lot of swing trades, so I didn't take all of the day trades today. Earnings was today, right? So anytime there's an event, it could be the Fed, it could be earnings or whatever, it's going to be volatile, it's going to be crazy. Okay, so you just have to expect that, right? So here we go. First 5-minute candle, gap up, right? Opening range breakout. Even if you took calls right there, take it for a little pop, that's still decent money, right? And you have the Fibonacci's here to guide your targets. Okay, so you can say, okay, this one is on the 618. I'm going to take the break from the 618 to the 786 and cover. That's a, when you're playing earnings after earnings, you have to be a lot more aware, right? And a lot more careful. And then here we go. Like this one is a very nice pattern. We actually so we rejected on the 786. So here we go. So you can have your limit order here, or you can just wait for this candlestick here. This one is a false breakout, right? We see the big wick, the turnaround. That's your entry for the puts. Okay. And if you actually look at this, we come back and we actually test the previous day's high. So this is actually a beautiful place for calls. That's why I always have these lines on there, right? So we broke out, we came back, we tested it, and we held it. And you can see we held it because we had this beautiful hammer. So that's actually a nice play for calls there. And then this right here, this is just this is manipulation. And it happens in the stock market. Don't think it doesn't happen. These are the big boys deciding that, hey, I'm locking in profits and I'm gone. Or these are the big boys saying, all right, we're going to short now. This happens in the market. You can't get away from it. This is why you can't put all of your eggs in one basket in trading. That's why I give you guys 4 picks. That's why when I'm trading in my swing trading account, I have 30 trades on, 40 trades on, because some trades are bound to be manipulated. And you have to understand that. This is the stock market. There is going to be manipulation sometimes. There's going to be big things that you don't understand. It's not going to be perfect. Okay, I'm not going to come here and lie to you and tell you I know why that happened. Somebody asked me today, why did it drop from there? I don't know. Right? I don't know. I'm not going to pretend to be one of those guys that say that they do, because I don't. So what should happen here is, if you have calls, you have to be managing your risk. You have to be like, you have to have a stop loss. If you don't have a stop loss, then whatever you put into those options, you would need to know that, hey, I can lose it all. That's why I always tell you guys, always, always, always never risk more than 1 to 2% of your account in these option plays, because sometimes if you're wrong, it's going to go to 0. Okay. So for me, when like I always show you guys, when I look at stocks, when I see manipulation, I don't trade them. I move on to the next one. Okay. And then let's move on to J&J. I really wanted to do, man, I don't know how long I'm going to end up being on here for. Are you guys having a good time? Are you willing to stay with me for another half an hour if we continue and we talk about a few other things? Because I wanted to talk to you guys about swing trading automation. You know? Okay, good. Okay. So Johnson & Johnson was the one. Well, it was basically the one where the levels approach really did well, right? It did well, right? So we have the first 5-minute bars actually opens above the level. So if you took calls anywhere in here, right? If you took calls, if your stop loss is too tight, you're gonna get stopped out. It's gonna happen, right? So that's why when I play these, I basically like to play it like whatever I put in the option, I'm willing to lose it. So I can sit through all of this. Some of you might not be able to, and that's fine. It depends on your style, right? So this cluster here, right? This is just basically option premium killing, trapping traders, right? So we have this opening. So we have the first 5-minute bar, then an inside bar. So there's no opening range breakout. If you take the short below the inside bar, you get a tiny push, right? And then it pops back up. And then another one, inside bar, pops back up, fails, right? So that's how it is sometimes. That's how it is. So that's why you got to spread your bets out into different names, because you just need to get one or two of them to do well. The other ones you can lose. Doesn't matter, right? But basically here with Johnson & Johnson, you see, when we retest the level, like here, we retest the level, we come back down. But anytime it's the third or fourth or fifth or sixth time testing a level, it's likely to break, right? And yeah, someone said in the chart, the 15-minute was very clear, and that's true. That's why I tell you guys, you don't have to trade the 5. Like, look at this on the 15. I mean, it doesn't get better than that, right? So the 15-minute traders were rewarded today. Look at this beautiful inside bar. Like, that does not get better than that. That is absolutely beautiful. Look at this one right here. You have your inside bar right here. Take the break above, boom. Okay, another one right here. Scalp, boom. Right? So the whole point of me teaching you guys is for you to find what's your edge. I have my edge. What's yours? I'm giving you the tools. I'm giving you everything you need. No reason for you not to go out there and figure out what you want to do. Are you a 15-minute trader? Are you a 30-minute trader? Are you a 5-minute? Are you a 3-minute? It's up to you guys. I want to empower you to make those decisions. I don't want you to follow me blindly. Why? There's no point in that. Here we go. Here's also the 30-minute chart. So actually on the 30-minute chart, we got a holy grail set up right away, right? The inside bar there, boom, and another one over there. So for those people that come to me, hey, Rich, I'm new to trading and I can't do the 5 minutes too fast. Okay, go to the 15, go to the 30, and get on there and practice. And you don't even have to risk money. Just practice, just paper trade, just do different things. Okay, the knowledge is there for you, but you got to put in the work. You got to find what works for you. My biggest ambition, the thing that would make me the most happy, is if one of you guys came to me and said, hey, Rich, you know what? I came up with my own system. And my system is on the 27-minute chart. It's on the 27-minute chart. I've back tested it. And I find that anytime I find a holy grail on the 27-minute chart, I have a 60% win rate and I have a 2-to-1 risk to reward. And I've tested this on the S&P 500 stocks, or I've just done this on SPY. That would make me happy. That's what it's about. What else is the reason for living if you can't help somebody else? Somebody give me the answer to the question. Someone in chat. What is the reason for living if you can't help anyone else? Are you going to take all of your experiences? Are you going to take all of your knowledge to the grave? What is it going to do for you when you're dead? Think about that for a second. All right. So there we go. So basically, I want to conclude on this, and I want to say that we basically, like, let's just make it simple. So we have 3 types of traders, 3 types of trading. We have the breakout trader, we have the Fibonacci trader, and we have the reversal trader. Eventually, when you become a professional trader and you have a lot of experience, you can do all 3 all at the same time also. Okay, you can do it. There's many times where I'm in this and I'm short in this, and vice versa. Because I only think in terms of numbers. I only think in terms of risk to reward. That's it. So eventually you're going to get to that level. Okay. So now what I want to do is I want to move on from the 5 minutes and stuff like that. And I want to talk more about how you can do these type of stuff from a swing trading perspective for the people that don't have time. So we got here big baddie. Which would you recommend for a noob? Which of the 3? Honestly, it's not about which one's easier, like for new traders, whatever. It's about which one do you think you can execute the easiest. It's about you. Which one do you think you can do? Do you think the breakout will work for you? Or do you think you rather wait for a reversal? Or are you good at drawing the fibs, right? Those ones you have to ask yourself that question, because it depends on you. But what you can do is be back testing and market replay, like I showed you here on Tradingview. Okay. use the market replay and practice. Practice, practice, practice. And eventually, what you like is going to come to you. And I know what I like, right? What I like doing is what I'm about to show you. All right, Lee, good night, brother. Okay. So I'm going to show you what I like doing for my swing trades. So let's pull up the Discord for a second. So a lot of people have been asking me this question, and some of it is in a negative way and some of it is in a positive way. So some people are like, some people, okay, so here we go. So these are some guys in here showing their profits and stuff like that from the trades today. Good stuff. Okay, this is good. But this is my Discord. So I want to talk to you guys about what I do. Because the problem is some people are like, well, why are you giving away everything for free? Why are you doing all of this for free? What's the benefit of being in your room? There's no benefit of being in your room, blah, 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 all that stuff. Okay, so I'm gonna break it all down right now. I'm gonna show you guys everything. But I think that, you guys would be surprised. You guys would be surprised. Let me show you something. Okay, I just want to talk about the truth. So these are all of my trades for July, and you can see some of the trades are still open, meaning we didn't get into the trades yet. So you can copy this, whatever. I'm giving it to you for free today. It doesn't matter. I just want to I want to show you guys what I do, and I want to anyone in my private room. I want to walk through my whole process. I want to explain everything what I do, and you'll be surprised. I only had one loser this month. Okay, and I had one loser, and I still have people that are like, like not happy in terms of like what I'm giving stuff for free and what. But at the end of the day, it's my decision what I want to, if I want to help people and how I want to help people. Okay, and it's not the majority of people, just a few people. But I just want to. It's not fair to me to just, I have to find a balance. That's what I'm trying to say. I have to find a balance of what I give to my private members and what I give for free. And it's hard for me because I'm a very giving person, but I also understand the other people on the other side, the way they think. So I'm going to talk about my process now. So what I do, okay? So let's create a watch list. How about we create a watch list together? Okay? So let's create a watch list together. Okay? So let's go in here. Here we go. One sec. Link to Discord. Let me share the link right here. One second. Share server settings. Invite people. So guys, my Discord, I have a paid section and a free section. Okay. So you guys can get access to the free section. We have a lot of stuff in there to help you. Okay. So let me paste that in there. Boom. All right. So $9.99 from a brother, Red Gorillas. Let me look at the super sticker before we get started. Boom. I got the thumbs up, brother. Thank you very much. All right. So what we're going to do here is we are going to build a watch list together, and I want to show you like what I do. Okay. So I'm going to go here. So this is like how I build it every week. Okay. So take all these off and I'm going to add. So now let's add all of my July swing trades. Okay. So the ones that are closed, we didn't take any trade there. So we're going to do Snap, Diz, PayPal, AXP, Amazon, XOP. Is XOP in there, or did I see? No, XOM. XOM, Uber, Mara, MS, MA, eBay, Walmart, EA, EXC. Okay, so here we go. So get rid of the XOP, and this is what I do. So every Friday, what bars are gonna close? What do you guys think? So every Friday, what bars are gonna close in the market on the candlestick side? What bar is gonna be closed? What is it? The daily, the hourly? What do you guys think? Which one? So the most important one is the weekly, right? So the weekly chart, the weekly candlestick is gonna close. So let's go to let's start with Disney. because I like that one. So here we go, weekly. Okay, so here we go. So here's Disney on the weekly, and then we'll also go to the monthly there, and let's go to the, so let's start with the weekly. Okay, so here we go. So this is Disney on the weekly. So let me ask you guys a question. So do you think the weekly bar has more volume than a daily bar, or does the daily bar have more volume than the weekly bar? What do you guys think? The weekly or the daily? Which one has more volume? Weekly, weekly, weekly. Yes, because the weekly candlestick is the aggregation of all of the week's trades. And it shows you the high and the low and the open and the close of the week. So it's all of the traders in the week showing you basically their psychology. Okay? So how we took Disney was so basically what I did is I ran my scanners and I found Disney on my scanner. I found it basically 3 weeks ago. This is the Holy Grail pattern. Okay? Can you guys see the Holy Grail pattern? Hit me with a 1 if you can see the Holy Grail pattern. Do you guys see it? Good. So anytime we have the heavens opening up and 2 lights coming down, that's the Holy Grail. Okay? So the first time Disney comes to my watch list is when it's the Holy Grail pattern shows up. It comes to my watch list. And then from there, when I'm doing a swing trade, I pick my bias. Okay? And this might be new for some of you. I pick my bias. I say, do I want to take Disney long or do I want to take it short? And you can see the week after Disney actually it broke the low and went down. This is my style. You can take the break of the bar, like I teach you guys, because it's just easier. You can say, oh, if it breaks a high, I'm going to go long. If it breaks a low, I'm going to go short. But for me, because I'm analyzing my portfolio, I'm telling myself, how many longs can I have? How many shorts can I have? Because I have a large portfolio, so I have to think. I can't just think in simple terms. I have to think about, well, is this going to expose me to X, Y, Z? And I also have to think about all the members in my swing room. Okay, guys? I have, let's see how much I have now. I went from 100 people. Okay, I went from 100 people a month and a half ago to 494 people because I add value and change people's lives. Okay, so what I'm trying to say here is I'm accountable to these people because they're basically paying money to me for me to do my work in a professional way and not to give them bullshit, right? So I said I'm going to take Disney long above this level, 178.60. And my stop is going to be 175.39. I'm not going to talk about the entry and the stop because that's a totally other different video. There's many ways to do that. Okay. So what we did was the week after the Holy Grail, I saw Disney break down and then I saw it turn around and create the hammer. And then from there, I have to make the decision. Should I keep the order open for the next week or should I close it? And that's why here, when you see this here, order closed, that means that I close the order. Okay. So basically when we get the setup, I go into here in the private room and then I post the setup on the weekend for everybody before. Let me stress that. I post it the weekend before the open so everybody knows the exact entry, stop loss, and target. There's no guessing. There's no bullshit. Okay, I don't say, oh, I don't post something. Hey, I got filled at $90 and the stock is at 100. And I know people that do that, but I'm not gonna do that. Okay, so let me go back to Disney and let me find when I initially posted it. Okay. A lot of parties in here. We have a good time in here. So where the hell are you? Disney. Okay. So this one on Disney, 178.60. Okay, there we go. Okay, so this was actually before I had my like my Holy Grail and stuff. I didn't have that on, so that's why the chart is, you see different colors, right? So there we go. So now let me tell you how the trade works. This is how we can do automation. Okay, this is how we do automation. So I'm only entering Disney when it breaks 178.60. So you can see someone's asking, did I get stopped out? No, when the trade came all the way here, I was never in the trade. This is the breakout trading that I just taught you guys. Okay, so I get in, you see this candle here, this one here, the next week when it breaks 178.60, then I am filled. Okay, and let me show you guys some examples here of the orders, how you put it in the broker. Here we go. This is an example. So this is one of the stuff from my broker. This is Interactive Brokers. This is I share in the private room for my members. So this is an example. So stop limit, the order has to be stop limit. And we're going to do a buy. And here we go. Here are the attached orders. Here's the stop loss and here's the target. So I show you guys here. This is how you do it in Interactive Brokers. That's a broker that I use and they should sponsor me. I don't know why not, why they haven't yet, right? So good to cancel. Good till canceled means that the order will stay open until you actually hit cancel order. So this is how you can do automated trading. You can actually put it in on the weekend. So when I give everybody, this is the setup for Disney, they can go and put it in the broker way ahead of time. Okay. So this is how you do a good to cancel order with a bracket for the stop loss and the target. So now what happens? So Disney comes in, boom, it fills us. And then we have all of these targets right here. Look. So here's the entry to stop loss. And then I have basically 1, 2, 3, 4, 5, 6 initial targets. And this is my style that I like to do, scaling out. Okay. So here we go. This is how I like scale out. Here's the partial first target, 1.25, 1.5, 1.75, 185. These are all targets. And what it is, it's just a measurement of how much we risked. It's so if you risk $1,000 here, when we get to 1, that means you made $1,000. This is what we call 1-to-1 risk to reward. Okay. And if we go for 1.5, that's going to be 1,500. If we go to 2, it's going to be 2,000 and so on and so forth. So what I do is I scale out as I go up and then I get the stop loss to break even. So then I get my stop loss to break even like that. So right now on Disney, my stop loss is break even. Anytime we go above the 1R, so the first target, stop loss goes to break even so I can protect myself and have a risk-free trade. Okay. And then I also took the options. So a lot of people want to know about the options. So basically what I do right here for the options is I'm using a conditional order. Now this is very advanced, and I'm gonna talk to you guys what it means. So when Disney breaks 178.60, it automatically buys me the July 23rd 180 call at the market. So I bought the July 23rd 180 call at $2.19. That's my market fill. Okay. And with the swing trades, I'm willing to take a market fill because look, I have this call until July 23rd. So I'm not worried. I'm not too worried about like, oh, I have to sell it by the end of the day. No. Like, I'm not too worried about that. Right? So this is basically a combination of the shares and the options. And notice I don't put options for every single play because I personally go through and I look at the spreads and all of that. And I try to make sure we're getting a good price, right? And the other thing now is since Black Box Stocks, they approached me, they DM me and said, hey, brother, we see what you're doing and we like what you're doing and we've heard good things about you and we're going to give you lifetime membership to the tool. And I was just blown away because I very much am very, very appreciate that. I'm very, very grateful for that. So now what I'm doing is I'm finding a way to use the black box to help me to get these, to help me figure out the strike, to help me figure out what my bias is. Like, should it be bullish or bearish based on the flow? I'm working on all of those things, guys. I'm on a different level. And I have other people in my room and some of my mods are helping me. And we're going to figure this out. And then I'm going to use the knowledge to help combine that. Okay? Like, black box stock should be on here with me right now. You guys should message them and be like, listen, come on the YouTube with Rich and let's talk, let's help people out. Right? Okay, so this is what I do. So these trades, these swing trades are for my private room. I don't share the entry and the stop and all that on my public Twitter because I can't. It's not fair. Okay? So now here's the process. Every weekend, I run the scanners and I get maybe 200 or 300 stocks. From there, I narrow it down to basically 5 to 10. And from that 5 to 10, I set it up in the broker and I give it to everyone in the room on the weekend. So now you can put the orders in and we all gonna get in at the same time. Whether it's a winner or a loser, it doesn't matter. At least we're being honest and transparent. I'd rather lose 10 trades in a row with being honest than trying to lie to people and say, well, you know what? I actually got in at a better price than you guys because I'm magical. Okay? So the trades are posted on the weekend, all these setups here, and then from there, you put it in the broker, you set it all up, and then as we get filled, we have alerts. So you don't even need the alerts. The alerts are just optional. You don't need them, but this is for people that, just as a reminder, hey, we got filled. Like, so let's go to the beginning of this week. Let's walk through this week. So the 12th. Okay? Let's just say 7th. Okay, so let's start off here, for example. Okay, so EA long filled, MA long filled, Starbucks 1.5x. So Starbucks is a trade from last month that's hitting targets. MA partial, so MasterCard's hitting the partial target. McDonald's hitting the partial target. PayPal, big winner, 1.75 times. So then PayPal comes here, right? So PayPal is right here, 1.75x. You guys see that? That's what I'm trying to do. I'm trying to make it automated and clean. Right? So there we go. So here's all the alerts. Here are my moderators working their ass off. And I appreciate all of them. Look at this. Okay? That's how we do it. All right? And then here's the other thing here. Nobody that I have seen is this transparent. Every single trade. So I started the swing trading room in January. I've been swing trading for a long time and I just decided that I want to share it with people because I think my process can help people because it's simple. You put in the trades, win or lose, whatever. Manage your risk. Okay? So all of my trades since January, every single trade, guys, has been posted here. And you can see I had some bad months. I'm not, like, trading is not, you're not always going to win. Okay? But recently I've been on a good roll. All right? And I'm not saying it's going to last in any way or shape or form. And, you know, so every single trade that you guys seen here, I've taken personally. I take every single trade that I post. I'm not here to pump any. This is basically a documentation of my trading journey. That's what it is. Ooh, Davis Trades is in here. What's up, brother? Thank you very much. Thank you very much for being here. I know you were the first one to be interviewed on GAA Options stream, brother. Maybe I can get you on here one day, man. Thank you for being a part of this. I really appreciate it, man. I can't even express that, how much this means to me. Thank you. Thank you very much. Are Tradingview and Interactive Borders the only tools we need from Derek with the $5 donation? Thank you very much, brother. For me, that's what I use. You can use whatever you want, right? I like using those too. You don't have to, right? Some people in my room use Thinkorswim. Some use Fidelity, whatever. It's up to you. But what I think you need is you need to get access to conditional orders. You need to have access to bracket orders. If you can't put in an order that has an entry and a stop loss and a target, then you have a problem, right? And some brokers, like, they don't have that feature, or some of them do, but you need to get like premium access. So those are things that's important. All right. So let me just walk you guys through one more. Like, so what I'm trying to do here, guys, I'm not trying to tell you to join my room. I'm not. What I'm trying to tell you is this is my process. This is what I do. So what you can do is you can come up with your style on how you want to trade. And what I'm trying to show you here is you can just be swing trading automated. You don't have to be a day trader if you can't be. If you don't have the time to be there at 9:30 every single day and 15 minutes, 20 minutes, an hour to sit there and grind it out, then just do the automated way. Okay? And as I evolved as a trader, I actually like the automated way better than the other way because I just don't have the time anymore. You know, I don't have the time anymore. So there we go. So for the people in my private room that are here right now, I just wanted to show you guys there's one more thing that's very important, and everybody should do this right now. Okay, I wrote this whole guide right here. Okay, read this guide. Let's look at this guide. I wrote this whole thing together, and it talks about everything, and it has links to the videos. Okay, so let's just go through it high level. Please download this. You don't have to come to the room. Download this and use it to help your trading. Okay, so we don't need to read the purpose. Okay, but the process on a weekly basis, 5 to 10 trades will be posted on the weekends, usually Friday. I always basically right after the close, I go home. I don't go out. I don't do anything. I start running the scanners and I start posting the picks ahead of the Monday open. This ensures you have sufficient time to enter trades into your broker. Throughout the week, I'll provide notifications when we are all filled on a position as well as when we hit targets via private Twitter and Discord. Make sure to turn on notification on Twitter. Every day at the market close, I'll provide an updated trade along so you can clearly see open and close positions. If you're joining midweek, you can take any trade that says order open. You can take any trade that says order open. So now this is the most important part, the fact, risk management. I keep my risk per trade at 1 to 2% of my total trading account. For example, if I have a 10K account, I will not risk more than $200 a trade. Please watch this video on position sizing. Here's a free video, guys, on position sizing. Watch the video. Order entry. I use stop limit orders for entries with brackets. All of my orders have a stop loss and a target. Once I enter the trades in my broker, I use good to cancel orders so my orders stay open until I close them. And I will notify you when to close the trade. So if I decide I want to close it, I will tell you guys, right? And then trade management, this is very important. This is what everybody asks about. I use a scaling out method for taking profits as some of the trades we take become multi-year bottoms or tops for the stocks we trade. So let me show you an example of a multi bottom that we played. Here we go. Okay, so here's TD. Okay, here's TD. The first entry on TD was here. Okay, so like this, look how many weeks? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. Like basically 20 weeks, right? Guys, say bye to Davis Trades. Heading out, trading work, great work, my man. I just want to check out your channel and provide my support. Guys, hit this, tell this guy, follow this guy on Twitter if you haven't, and hit this guy up with a, tell him good night. Tell him thanks for being here. Okay, this is what we do. This is what we do. We change lives. That's what we're all about. Change lives. Thanks, brother. All right. So like that's an example of a multi-year. What else do we have here? I'm trying to think about one that's just been going on forever. Oracle was one of them for a while. Okay. Here was the Oracle one we got in right here. Look at this inside bar. Boom. You guys see that? We took this Oracle, this in March, this inside bar right there. That one is beautiful. And here's a Holy Grail. That's another one that's beautiful. Right? So that's what I mean, right? So I prefer to use a scaling out approach because if I get out of everything, I'm going to have FOMO. Right? We all have FOMO to various degrees. So that's why I prefer to have something on at the end of the day. See what I mean? So that's why I always like to scale out. So when we hit the first target provided in the log, you have a choice of taking off 20 to 50% of your position or nothing at all. From this point, I will let you know when we hit various R multiples, such as 1.5, 2, 2.5, etc. Continue to scale out as we hit various targets. How much of the position you exit at each target level depends on your trading plan. If your options, stocks, also your stop loss management is a personal preference. Yes, I don't want to tell you what to do. I can't tell you what to do. I'm not a financial advisor. I'm a CPA, not a financial advisor. I can't tell you what to do. So you guys have to, here's some sample plans that I came up with. So conservative person that wants to do quick turnover, 50% at the first target, stock goes to break even, 25% at 1.5, 25% at 2 times. This is actually perfect for someone that's basically doing options, because the options needs to be in and out in a relatively quick amount of time to capitalize on the time value. So that's one I like for the option plays. And then here's another one, like a more aggressive one, that like an investor, 20% at the first target. Do not move your stop, so you can allow more room for the trade in case the stock retraces. 40% at the second, then you move stop to break even, then 20% at 3 times, 15% at 4 times, and 5% as a long-term investment. So you just don't even look at that, right? So there we go. So I want to emphasize both approaches make money in the long run. The conservative approach allows you to turn over your capital quicker, but will limit your potential upside. And the aggressive investor, they have a potential for bigger home runs. Okay. So that's it. Like, this is it. Like, that's a course right there. That's what some of these guys are charging $5,000 for right there. Everything I just showed you, $5,000. That's what it is. You guys know who they are, right? That's $5,000 right there. So what we're going to do here, so you can just download a copy from my website right there. What I want to do here is I want to copy this and I want to post it here from my paid members. Because a lot of people were asking me, and I just want to make sure that I post that, at least that one in there. Okay, so can I copy all of this? Yes, we can. Okay, I'm gonna hit that again. At paid member. Boom. There we go. Oh my God, what is this? There we go. Okay, good. So now everybody's good to go. All right. So there we go. And if you guys are not in the room, that's fine. Just go here and download it. Okay. All right. And here's the thing. When you think about it, guys, there's actually infinite amount of trades. So I just showed you on the weekly, right? Okay, but now take a second and just think about this. Let your mind be blown right now. Okay, think about this for a second. Hold on, my brother right here. Beasting with the $5. My donations will get better once my knowledge grows. Thank you. Thank you very much, brother. You donate enough anyways, brother. Don't worry about it at all. You donate what you can. You don't have to at all. I appreciate that very much, sir. Very, very much. Okay, so now let's blow your mind. Let's blow your mind. Let me go to this. See if I still have it here. I did this for myself. Okay. And I'm going to post it right now. How do I make it pretty? Download. I'm going to post it right now. I'm going to talk about it. For anybody out there that's creating things, like, use Canva. It's really good. Okay. These are what I do here. And I'm going to share it with you guys right now. Let's post it on Twitter for the squad. Let's get everybody feeling nice. Here we go. And then I'm going to talk about it. These are time frames you don't normally hear about, but have paid me big. Okay, guys, hit me with a like on that if you guys can. Okay, so here we go. So this is what I'm trying to do to blow your mind right here. These are all the time frames I'm looking at for my swings: weekly, 2 week, 3 week, monthly, 2 month, 3 month, quarterly. Day trading, 4 day, 3 day, 2 day, daily. And I can go even lower. I can go 4 hour, 2 hour, 1 hour, 30 minute, 50 minute, 5 minute, 3 minute. Now, get the pen and the pad out. Now think about this for a second. How many holy grail or inside bar patterns do you think are happening on all of these time frames? What do you guys think? Tell me a number. How many inside bar patterns or holy grail patterns do you think are happening on all these time frames? So we got $10 from our brother Sean C right here. Thanks for all you do. We'll buy the book soon. Thank you very much, brother. I will get that. I gotta wrap this up soon because I have to send some books out. So thank you. So I see more than 3. I see infinity. I see millions. So this is the answer. But possibly infinity. And this is the truth that I want to share with you guys today. There are infinite amounts of setups because there are so many stocks. And there's so many markets, futures, US stocks, Chinese stocks, coffee, S&P, NASDAQ, IWM, Russell, gold, silver, platinum. Do you guys understand what I'm trying to show you right now? There's no excuse to not make it. Get out there, find your style, find your path, what you want it to be, and put in the work. I look at all of these time frames every single week, and I find the best for my people and for myself, and I take these trades every single week. So it is a lot of work. It's not easy. I'm not trying to tell you it's easy to look at all of these time frames, to run scanners. Every single day I run the scanner for you guys. I find picks for you guys. I post it for free. To do all of it is not easy, but it is very rewarding. All right? And that's how I want to end off the stream today. Okay? That's how I want to end off the stream is this for me is my masterpiece. It's my masterpiece. I have all of my patterns I've given to you guys for free. All of them given to you guys for free. All of them. And I even created it in Tradingview with the help of a few people so you can see it for free. And I'm giving you the time frames that nobody talks about but me. Nobody talks about these time frames but me because I put in the work. Okay? And I'm giving it to you guys tonight, and I wish you guys the best. I want you guys to do well. Make me proud, okay? Make me proud. Someone keeps asking about the book. If you want to buy the book, guys, if you enjoy some guys, if you learn anything, do me a favor. If you go out there and you make money with what I'm teaching you, then hit me up and buy a copy of my book. If you don't make money, you don't have to. But just promise me that. Okay? I think that's fair. All right. So if you want to buy the book right here, my book, just hit the PayPal right there. Here's some samples from my book. The pages, I gave some samples there. I have also a YouTube video talking about the Fibonacci that you can check out. And anybody that buys the book is going to get 1 month for free in the swing trading room. And that's fair, guys. I'm all about being fair. That is fair. Trust me. There's guys that are selling subs for $199 a month and not telling you where to put a stop loss. Okay. All right, brothers and sisters, thank you so much for your time. I really, really, really was looking forward today to doing this because I just had a great feeling that it's going to be a great day for you guys, for us to learn together. And I want to thank you so much for being here. And the time flies when we're here. And this is just beautiful. This is just my masterpiece. So thank you very much, everyone. And you guys have a good night and look out for the option picks that I'm going to be working on right now. All right. Take care, brothers and sisters. Take care.